Welcome to another edition of Strategic Financial Management. In today's class, we shall continue our lecture on merger and acquisition. Now, this question could be like the last question we solve under merger and acquisition. And don't forget that I've mentioned to you that the free cash flow is part of it. The method of valuation, these are part of merger and acquisition, right? They are part of it, right? So in this case, since you already have the knowledge of valuation of a business, it's still applicable. The only part that, okay, I know that, okay, it's kind of technical and it is not technical, is share for share. And go and check past question. Go and check when Ican said share for share, all right? Exchange. You see the examiner comment from there. There is share for share exchange. There is cash for shares exchange as well, right? So we treat this part of share to share. When we get to the intensive class, we look at the cash to share for those who are here to pay, right? Then guess what? Those people who are paid, I think are about 35 students have actually paid. Guess what? Most of these payments are coming from LinkedIn, from from friends, from referrals, from the students, and all that, right? About statistics shows that about 15% of the students in that platform, in this same our platform, paid 15%, just 15%, right? All other percentage are coming from LinkedIn, and those people who believe in what we're doing, right? Now, do well, right? To join us. By next week, we are starting. There is no recording. You have to be intentional about what you are doing. Either you join or you stay, right? You have to be intentional about what we are doing, right? You have to be there, right? Your mind have to be there, right? And that is why you paid for it, class. That is why you pay. So if you are here to subscribe, right? We don't need crowd. Actually, I've discussed with the stakeholders that we don't need it. We don't need crowd, right? It is strictly on principles. This is the principle we move. We start on Tuesday 7:30. We start on Tuesday 7:30, maybe to 11 or to 12. 7:30 to 11 or 7:30 to 12. Anyone, right? It depends on how we can quickly round up our what the questions. Then Saturday and Sunday will be communicated, right? Now, in today's class, we'll look at the C part of this question, class, which is the share to share, right? The share for share. Now, the question is, how do we attack this question now? The approach is very important, right? LP intends to make an offer to LT based on upon based on based upon a share for share swap, class. Based on what? Share for share swap. Now, who is LP? Right? From our question, LP is the acquiring, right? The acquiring company. The company that wants to take over LT, right? Now, LP will exchange one of its shares for every two LT shares. Now, what is the interpretation of this? A simple interpretation of this is that now, for every one shares, for every two shares of LT, we issued one for every two shares in LT. Now, what does that mean is that if it means that if they want to acquire LT, don't forget LT has 150 million shares. Class, 150 million shares, right? 150 million shares, right? Now, the 150 million shares, right? Then LT will now offer one of its shares for every, if LT want to issue the shares, it will be based on one for every two which means that two from LT, right? Two shares from LT, LP will exchange it with what? One shares. Two shares from LT, right? Which is the acquired company from, right? For every what? One shares of its what? We exchange one of its shares for every two shares. So for every two shares in LT, right? For every two shares in LP, we issue one shares. Now, in this case now, how many shares, class, how many shares will LP issue to LT? Class, am I communicating? Am I communicating? Now, LP will exchange one of its shares for every two shares LT. Now, there is a share swap. Now, what it means is that for every two shares, for every two shares in LT, right? LP will offer one shares for every two shares. Now, the question now is, now, if for every one shares, right? For every two shares in LT, right? LP will issue one shares. Now, how many numbers of shares will LP issued for the every two shares? That is the question. Now, the question now is how many shares will LP issue for that every two shares? Now, that don't forget, from the question, we all have it, right? I've sent it to the platform. Now, we all have it. Now, don't forget that LT has 150 shares. Let me quickly confirm that. 150 shares, right? Okay, 150 shares. 150 million shares, right? 150 what? 150 million shares. Now, it means that the total numbers of shares, right, in LT is 150 shares. Now, for every two shares, that is for one shares, LP we for every two shares, right, in LT, LP will issue one for every two shares in LP, right? In LT, sorry. LP will what? Issue one. What is the LP? LP is the acquiring company, right? While the other one is the what? Acquired company. Now, how many numbers of shares will LP issued for that? Now, it is calculated as the 150 million divided by, if you divide the 150 million divided by 2, what do you have, class? 150 million divided by 2, what do you have, class? 75 million shares. 75 million shares. Now, what it means is that for every two shares in LT, for every two shares in LT, LP we issue one, and this one will result to 75 million shares, which means that the two shares, this is like it is like this: two shares one, two shares two, two shares three. Now, how many numbers of shares will LP now issue? It will be 75 million shares, class. So, which means that LP will have to issue 75 million shares, because for every one share, right, of its shares, for every two shares in what? In LP. That is what it means. Class, am I communicating, please? Am I communicating, please? So, in this case now, right, if that is established, assuming that LP can maintain its EPS. Don't forget, LP actually have its EPS given to us before now, which is 12.2. Its board of directors has chosen the takeover target with care. LP has maintained its price earning ratio on the stock market, 12.2, right? The PE ratio, 12.2, right? 12.2. Now, class, calculate the percentage gain in equity value that will be earned by both groups of shares. 7 marks. Class, this is 7 marks. What does that mean? It means that if there is a takeover, just like the way we normally do the what is it called? Synergy, right? So if the takeover occur, right, then calculate the percentage gain in equity value. What will the market value of equity of LP increase, right? Now, if it increase by how many percentage as a result of combined, right? Now, another question is, will the market value or equity value of LT, will it increase as well? Now, if it increase, the question is by how many percentage? That is why they say, what is the percentage gain? Now, if there will be loss, the question could have been that calculate the percentage gain or loss. So it means that you'll be the one to determine whether whether after the acquisition, right, there is a loss in the market value. What is the loss? Before the acquisition, what is the market value? After the acquisition, what is the market value, right? With this market value, will it increase? Now, don't forget, class, don't forget that that taking over, one of the disadvantages of merger or acquisition is what? Loss in proportion of what? Loss in proportion of ownership, right? Now, as a result of taking over, the percentage, remember, don't forget that, okay, if Abdurrahman have maybe 70% shares in the company, but because of taking over or merger, right, the 75% interest will drop because people will come in, right? That means that it will lead to what? Dilution of shares. Now, why am I saying this? I just want us to pick it up, right, with different perspectives, because the question could change, right? The question could be that, oh, what will be the dilution of shares? How many numbers of shares and all that? We'll get there when we get to the intensive, right? Intensive class, we'll talk about the cash price of it. Now, in this case, now, the first thing we need to do, now, let's quickly walk back. Let's check our suggested solution in the previous lecture, right? Then, now, don't forget that our value of equity is 16 naira per shares, class. Is 16 naira per shares. Now, any day, anytime, we want to calculate, maybe if you want to calculate the percentage gain in shares, right? As a result of combined. The question says calculate the percentage gain in equity value that will be earned by both groups of shareholders, right? Now we can move it this way. C, right? C, C determination of percentage gain in equity for the combined company. Right? Now, the first thing is, class, the first thing is, what is the numbers of shares that LP want to issue? Now, let's quickly do small analysis, right? LP is the acquiring company. LT is the acquired company. LT, right? Now, what is the numbers? Okay. Okay. LP, how many numbers of shares did LP have? Let's quickly check the numbers of shares. LP, it was actually mentioned, it was stated that LP has 375 million shares. LP has 375 million shares. Don't forget, as a result of the combined company, right, there will be an increase in the numbers of shares. One, and there will be a decrease. There will be a dilution of ownership, proportion of ownership as well. So LP has 375 million shares. Million shares, right? Now, LT, right? Shares issued, shares issued to LT. Now, class, the question says that for every 1 shares in LP, right? For every, will exchange one of its shares for every two LT shares. For every, which means that two shares, in LT, one, 2 shares in LT, that is 4, 2 shares in LT, that is 6. Now, the question is, class, the question is, what is the total numbers of shares issued? Now, the total numbers of shares, LT has 150 million shares. Is that not so? 150 divided by 2. What do you have? 150 divided by 2. 150 million shares of LT, right? Million shares, shares divided by 2. What do you have? This is 75 million shares, right? 75 million shares. This is 75 million shares. This is shares, right? 75 million shares. So, what is the total numbers of shares? Class, what is the total numbers of shares now? Come. So, gifted.
Yes, boss. Good evening,
Abeg o. Oya now.
Okay,
Right.
my question is this. Now, we did it this way because they said LP is to get 2 of LT shares for one of theirs, right? So let's say in a question where we said, okay, for every 3 of LP, we are getting 5 of LT. Are we still
Thank
going to
you.
do it this way?
Thank you. That is a very good question. Now, that is a very good question. I like that, right? Now, they said for everyone shares, right? We attract 2 of LT. Is that not so? Now, this 75 million is for every two shares, class, for every 2 shares in LT, what do we have? We have 75 million shares, right? Now, and these 75 million shares, we attract what? 1. Is that not so? So we could say 75 million shares times 1, class, times 1, because that's for every 2. For every 2 in LT, we give what? We give 75 million. That is for every 2, right? Which means that for every that 2, it demands for what? 1. You could say that means that 2 out of 75 million, 2 will attract 1. 2 will attract 1. Is that not so? 2 will attract 1. And it is just 1. We could say 75 million shares now times 1. That is a very good question. Times 1. Now, Adebin is for every 3 shares. If the exchange is for every 3 shares in exchange of 2 shares, right? Now, the calculation could have been that 150 million divided by 2, right? Times 3. Times what? Times 3. It will give the numbers of share issued to LT, right? Do we get that? Hello, class.
Okay. So what you're saying basically is instead of like we can do it this way, right? Like, okay, 1/2 times 150 million, or 3/2 times 150 million. Like if we are to issue for every two, for every three, we are getting two extra, right?
Okay. Yes. Okay, now let's change it this way. Let's say 150 divided by 2 times, okay, let me do it this way. Divided by 2, divided by 2. That's a very good question. Times 1, times 1, right? Okay. So what of this? Do you get it now?
Yes,
Do you
yes.
get?
Thank you very much.
Okay, that's fine. That's a very good question. Well done. I wanted to silence that part, but it's a very good question. Well done. Okay. Now, when you add these two together, what do we have? The total numbers of shares. Total numbers of shares. What do you have? Away. Hello.
450. 450.
450. Where is Pemisire? Pemisire, are you in this class?
Yes, I am.
450. Okay. Please figure. And Esther gifted. Right? 450, right? That will be the total numbers of shares. You can see that as a result of the takeover, the numbers of shares tactically it has actually increased to what? 450 million shares, right? That is the first step. Don't forget, the question says that calculate the percentage gain or loss that arise as a result of what? The conversion. Let me quickly go back again, right? So that we will get the question. Calculate what? The percentage gain in equity value that that will be earned by both groups of what? Of shareholders, right? The percentage what? Gain value, right? Now, if this is established, class, there are two approaches to this question, right? So we look at the first approach, right? Now, the question is, we want to know the value, class. We want to do what? We want to know the value. Now, for the combined company now, they will have 450. Is that not so? For the combined company. Now, the next question is, they say calculate the equity gain, right? The percentage gain in equity value, equity, right? And don't forget that shareholders depend the dividend that they will pay to shareholders. They look at the profit of the business. Is that also? They look at what? The profit, class. They look at the profit. In this case now, any day, anytime you want to solve share to share, this is the first step. Now, the second step is to combine the two profits together. That is profit after tax. That is the second step. Then, let's say LP, LT, right? So, what is the profit after tax? Is it in million? Is it in million? Okay. What is the profit after tax of LP? And what is the profit after tax of LT? Quickly, class. What is the profit after tax of LP? And what is the profit after tax? Are we there? What is the profit after tax? Hello?
430 for LP.
Okay, that's fine. Others are not seeing it, right?
1286 for LT.
Okay. Are we there? Right? 4430. And this is what? 1286. 1286. 1286. 4430.
4430. 1286.
1286. So what is the addition? So what would be the earnings per share of the combined
5716.
company? What do you have?
5716.
5716. So 5716 class. This is the total profit. Total profit of the combined company. Now, don't forget, we want to get the market value of equity, right? Of equity. And this is the total what? The total profit. Now, in this case, what is how do we calculate the market value of equity? Right? When we want to calculate the market price, is that also, we will say the market price, the usual way we will say the market price equals to EPS, right? EPS or price earning ratio, PE ratio times earnings per share, right? Don't forget, the question says that calculate the percentage gain, right? Calculate what? The percentage gain. Calculate what? The percentage gain in equity value that will be earned by each. Now, the question now is, we need to get the market value per shares. Class, we need to get what? We need to get the market value per shares, or we could get the total value, the total market value of the business. Now, there are two ways, there are two approaches to this question, right? Now, this is the total profit. Is that not so? This is the what? This is the total profit. Now, if this is the total profit, and don't forget, is LP that want to merge, that want to take over LT. Is that not so? It is LP that want to take over what? LT. Now, now let's calculate the market price. I want to show something here. Market price LP. If this is LP, right? EPS. Okay, let's do it that way. Let's do it that way. I think we'll get it like that. Okay. Now, what is the market price for LP? Don't forget the PE ratio. Market price equals to the PE ratio. Now, they say determine the percentage gain in equity value of the combined company. Is that not so? Now, which means that if I combine the two together of each of the group, right? We want to know if the market price of LP increases, or the market price, and as well as the market price of LT. Is there any increase in the market price? Now, don't forget that PE ratio of LP is given to us in this question. What is the PE ratio? 12.2. Is that not so? 12.2.
12.2.
Assuming LP maintains 12.2, is that not so?
Yeah.
Which is earning per shares. It is a PE ratio. It's not earning per share. Right? It is a PE ratio. 12.2. Is that not so? 12.2. Now, if you want to get the earnings per share will be calculated as what? Where is the earning per share? Will be calculated as what? The profit after tax divided by the what? The numbers of shares. Class, the profit after tax divided by the what? The numbers of shares. Right? Just follow. The numbers of shares. Now, in this case now, we can come back and say PE ratio is 12.2 times the earnings per shares. What is the profit after tax of LP? What is the profit after tax of LP? Market price. So what is the profit after tax of LP? Okay, what is the
After
profit after tax?
combination,
No, the profit after tax is
4430.
4430. I say for LP. 43,
4430.
yes. Divided by the numbers of shares. What is the numbers of shares? 375, right?
Yes.
375, right? So what is the market price? Don't forget it's a million, right? So what is the market price per share?
144
What is the market?
point one.
One
144 naira 12 kobo.
12 kobo, right?
Mm.
Per shares. What is the market price? What is the market price? What is the market price of LT? LT. We want to know if there is an increase for the combined company, if there is percentage gain. If you want to know if there is a percentage gain will arise as a result of when we combine together. Will my market price increases or decreases? That is what we want to do, right? Now, there's a reason why we have to do this way, right? We'll get to that point. So the LT, which is the acquired company, the acquiring company, right? Now, the market price. Now, don't forget, okay, the market price is PE. Don't forget, anything that has to do with equity value, you get it from the market. Is that also EPS? Now, class, follow, please. Pay attention to this part. Don't forget that we have calculated the market price of the market price of LT. Is that also? We have calculated the market price of LT to be what? To be 60 naira. The market price is the equity value of equity per share. If you go to the stock market today, right, and you check your NGS, what you will have, right, probably 2 naira per shares is your value of equity per shares. It's still the same thing as the market value or market price. You can say market price of equity per what? Per share, right? The market price of equity per share. You can see that we've already calculated the market price of equity per shares, right? And what do we want to determine? We want to determine the PE ratio of the PE ratio of what is it called? Okay. Oh, sorry. I'm coming. Okay, sorry. Sorry, sorry. So, 60 naira, sorry, per shares. That is the market price. So there is no need for us to calculate the market price. Let me just say, okay, that's fine. That's fine. It's okay like this. Hello, class. Are we still together?
Yes, sir.
Hello? Okay, that's fine. So we don't need to calculate for the LT because we've calculated it as what? As 60 naira per share already. Class, we've calculated it as what? As 60 naira what? As 60 naira per share. That is the market price of that. The reason why we have to calculate for this is because we did not do free cash flow for LP, the acquiring company. I didn't mean we do the free cash flow, we would have said, okay, what is the market value of equity per share? We just pick it from there. Then we will now see if there will be an increase, the percentage increase or not. Now, of the what, of each of the what company. Now, we move ahead again. The next step, having calculated the market price of the acquiring company and the acquired company. Now, this is the combined profit. Class, pay attention. This is the what? This is the combined company profit. Who want to take over? Who? Who want to take over who? Who want to take over? LP want to take over LT. Now, if this is the total profit, right? The question is, if this is the total profit, what will be the total value of the business? Class, if it is a combined now, the total profit is 5,716,000. Agreed. Is that not so? Now, who is taking over who? LP is taking over LT. So now, we want to determine the value. Is that not so? Now, if you want to determine the value, which of the PE ratio are we going to use? Hello?
Yeah,
Do we get
probably
that question?
20. Yeah.
Do we get that question?
No, sir.
Hel- Yeah, okay. Um, okay. Okay. But you understand it to this point, right? Please confirm. Do you understand it to this point like this? Do you understand everything like this to this point? First, let me establish that if you understand it to this point.
Yes, sir.
Okay, okay, that's fine. That's fine. Now, come. This is the total profit of the combined, right? This is the total profit of the combined. What I want to calculate now is the total value of the combined company, right? And don't forget that we normally have something like this. I'm coming. If this will work like this, market price, if this will work like this, equals to the PE ratio times EPS. Mm, okay, no, it will not work like this. Let's use this part. Okay, let's use it this way. Total market value of the combined company. Okay, equals to class. We want to class. Don't forget that the profit that you make, let's say the total profit is 5,716,000, right? And their PE ratio, what is the PE ratio of the acquiring company given to us? What is the PE ratio of the acquiring company? What is the PE ratio of the acquiring company?
12.2.
2.2.
12.2. Is that not so? 12.2 times, right? What is the total profit of the combined company? The total profit of the combined company is what? 5,716,000, right? This is the, okay, right? So what do we have? When you multiply this, what do you have? Figure. EPS.
59,735 naira.
Million, right?
Yeah, I mean
735 point what? Is there any
point
point?
two.
0.2 million. Class, I know some of you. Now, this is another method, right? I want to calculate the total market value. I've already calculated the market price for each of the company. Class, let's pay attention, right? Now, what will be the total market value of the combined company? Now, do you know the reason why I want to get the total market value of the combined company? Do you know? The reason, let me put on my camera. Now, the reason why I want to get the total market value of the combined company is because I want to know the percentage. You know, if I merge with B now, I merge with B, and our total market value, right, as a result of that, it increased to 69.69,735,000. Now, how many percent? What will be my own market value? What will be my own market shares? Do you understand? You know, it is a combine now. What will be my own market shares? Because we are two. Is that also? Now, I combine with this now. Don't forget, what make up the profits, what make up the 69 is your PE ratio, PE ratio of the acquiring company. The PE ratio of what? The PE ratio of the acquiring company times, we don't need to calculate the EPS for each of the, what is it called? For each of the acquiring and acquired company. No, we don't want to get EPS per shares. We want to get the total value. If you want to get the total value, simply say, okay, this is the combined company. Now, who is the acquiring company? Multiply the PE ratio of the acquiring company times the total profit after tax. It will give you the total market value, right? You know, it is not market price again, right? Because you use 5 million, it is a million. 5,716 is a million, right? Times 12.2, it will give you what? The market value class. We don't want to get per one. We want to get what? The market price. Then the market value is now 69,735. Now, what it means is that is the combine. In this combine, I want to know what what is my shares in this? What is what? That is why the question says, okay, calculate the percentage gain in equity. Class, calculate the percentage gain in equity of each of the group. Now, if we have the total market value of 69,735, class, we have the total market value of 69,735. What will be the market price per share? That is another question. What will be the market price per share? The market price per share of the combined company will be 69,735.2 divided by the total numbers of shares, which is what? 450 million. Is that not so? We give you the what? The market price. Class, it will give you the what? The market price. Class, am I communicating, please? Hello?
Yes, sir.
Okay. Okay. That's fine. That's fine. That's fine. So, we move ahead, right? We can move ahead now. So, okay. I'm coming. Market price per share of the combined. Please, when it is 3 minutes to end this meeting, please let me know. Favor. Market price per share of the combined company is equals to 69,735.2 divided by the total numbers of shares, which is 450, right? Which is 450 million, because this also is also in million. So what do you have? When you divide it, what do you have?
154.96.
154.96 per shares. Class, this is for the combined
It's
company.
supposed to be 154.97.
You say?
It's supposed to be 54.97.
I don't understand. 54. I don't understand, please. What is that?
The figure is 154.967.
Okay,
So
97. Okay, okay.
154.97.
7. Okay. That's fine. That's fine. Hold on. That makes sense. That makes sense. Makes sense. Oh, it's 3 minutes. Okay. Coming. Let me quickly. Oh, oh. Okay. Oh, it's 3 minutes. No. Okay, let me quickly create another link, right? Don't worry, I will explain it again. You will understand. Oh, I will explain since this class is too dull, right? Exclusive. I think it's market price per share of the combined company. This is the market price per share of the combined company, right? Now, in this market share, it includes the market price of LP, right? As well as the market price of LT. Now the question is, what is it called? What is the market price of LT here? What will be the market price of LT here? Now, how do we determine that? If this is 154 naira 97 kobo. Now, if you want to determine the what is it called? The market price of LT, don't forget it is for every two. Is that not so? For every two. Now, for every two in LT. Is that not so? For every two in LT. So what you need to do is that you can divide this by what? By 2. Now, if you divide this, if you divide it by 2, will it give us? No. 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 Okay, class. What do you think we can do in this? Because we want to get the market price. Now, this is what we want to do. Before the acquisition, the acquiring company, let me scroll down so that you see. Okay, before the acquisition, before the acquisition, the acquiring company share is 144.122. The acquired company is 60 naira per share. Now, post acquisition, that is the combined. The market price per share of the combined company, right, is 154.97. Now, we need to calculate what is the numbers of shares, right? What is the market price of LP and LT? So when we get the market price of LT and LP, we can now do the percentage. That is new minus old. You get your what? Your percentage. Do you get? We now compare them that, okay, before acquisition, LP 144. That acquisition, LP is what? Now, what is the percentage gain? Now, in another question, the question could be that what is the percentage loss? Because you need to like compare, oh, is there any increase, right? Is there any synergy as a result of that? Class, am I communicating, please? Hello? Am I communicating?
Yes, sir.
Okay. Now, in this case now, we need to get we need to get for the, what is it called? This is for the combined company is 152. So we need to get for the for LT, is that also? Then we need to do what? We need to divide it by what? By 2. Now, do you know the reason why we have to divide it by 2? Right? It should be that for every, don't forget, it is for every 2 shares, 1. For every 2 shares is 1. Is that not so? Now, in this case, now, what we need to do is that we need to say market price LT post acquisition market price, right? Post acquisition market price LT, right? LT is equals to 154.97 divided by 2 times 1 divided by 2. Gifted, are you there? Divided by 2. Sister. Okay, divided by 2 times 1. Class, what do you have? What is the shares? What is the share portion? What is the market price? Post acquisition. All this is before,
45
before, okay. This is before acquisition. Before acquisition. Then this is also, you must understand this share to share, so you must understand it. Okay, let me see this one next. This one also. Okay. Then this is before acquisition. Now, so what do we have for this? Coming. What do we have for this? When you multiply, what do you have?
77.4.
Okay, 77. I'm coming. 77.49. 77.4 now. 4 now. 49. Is that not so? Class. 77 point what? 77.4 now. Now the question is there any percentage gain in this? Don't forget, class. Before the acquisition, the market price of LP is what is the market price? Is it 16 naira? Or Let me check. Oh. The LT is 16 naira, right? Is it 16 naira that we calculated here? Oh, it's 16 naira. Okay, okay. Okay, come. Oh, okay. It says 16 naira. Now, why is this thing is jumping? Okay, now LT before the acquisition, after the acquisition, so, no, classic share for share exchange, right? The first thing you need to do is that what is the total combined company shares? When you get the total combined company shares, what is the total profit of the combined company? You calculate the combined total profit of the combined company. Fine. What is the total market value of the combined company? You've calculated the total market value of the combined company. What is the market price per share of the combined company? Now, then the post-acquisition for the acquired company, how many percent, how many shares did they have from from the combined company market price? You get it. Now, the next question is that what is the percentage gain? What you need to do is that you say before the acquisition, what is the market price? What is the market price? Before the acquisition, what is the market price? Now, before the acquisition, the market price for LT is what? 60. Then after the acquisition, it increased to 77. Now, this is to tell you that there is a percentage gain in equity value. Now, if it is loss, the question could have been that what is the percentage, determine the percentage gain or loss. Class, in this case now, the shareholder of the acquired company will be willing to sell LT because there will be a value after the what? After the post acquisition. Class, am I communicating, please? Class, am I
Yes, sir.
communicating? Right? Now, we need to get what? The percentage gain in equity. Your market price is your equity price. If you go to NGS, right? I don't want to go there. You go to NGS today, you check it, right? The current market, that is the market price. If you want to get the value, multiply it by the volume traded for today. We give you the market value of equity of that company, right? Right? Is equity we are talking about. Now, the percentage gain is new minus old. What is the new? The post acquisition minus the pre-acquisition, before acquisition, divided by old, right? It will give you the percentage gain in what? In equity. That is, how many percent will LT shareholder gain from the what? From the acquisition, right? So in this case now, we move to that part. So we quickly have percentage gain, percentage gain in equity for LT, right? New minus old divided by old times 100. Old, right? Times 100. Times 100, right? So in this case, we move, right? This is the post-acquisition. You compare your post-acquisition and the pre-acquisition. Before the acquisition is 60 naira per share. That is what we calculate, right? Now, in this case, we can have 77 point what? 77 point what? 0.49, minus the old, which is before the acquisition, 60, right? Divided by 60 times 100, right? What is the percentage gain, right? What will be the percentage gain? Percentage gain. What is the percentage?
29.15%.
29
Yes, sir. 0.15%.
equal to 29.15%, right? Which means the shareholder will gain after the acquisition, the percentage gain in equity. So you still come here, percentage gain. If it could have been lost, it could have been that, oh, calculate the percentage loss or calculate the loss. If you want to calculate, if it is loss, just say 77.49 minus 60 class. If it is loss, if it is not percentage, just 77.49 minus 60. That is the loss. Then they will tell you to advise, right? They will tell you to do what? To advise, right? Don't forget, one of my best topic in SFM, right, is merger and acquisition after portfolio theory, right? When we in the intensive class, we'll talk more of what in a portfolio theory, right? We may not talk about the practical aspect because of our time, right? So the percentage gain in equity, right? LP. Now, in this case now, class, don't forget, it's LP that wants to take over. Now, before the acquisition is this, class. Now, when LP now take over, the market price is this. Is that not so? Hello, class. Before, because it's a combine, they take over the company. That is post-acquisition. Is that not so? 154.9, 154.97. Then after sorry, before the acquisition is 144.12. Then after the acquisition, what did they have? They have 154.97. So the shareholders of LP, we be willing that, oh, this is a good thing, right? Let's quickly buy over this because there will be a percentage gain on this, right? On this investment, right? So in this case now, for those that want to watch ball, so is this okay? Oh, is this question that you want to miss? Okay. Oh, where is exclusive? So LP, right? So what is the new 154.97, 154.97, 154.97 minus 144, 144, where is this? 144.12, 144.12. So what is the percentage? What is the percentage?
7.53%.
Thank you so much. God bless you. 7.53%. And you have solved the question, right? You can see when I started, that is one thing about SFM. If you observe me, when I start the question, I was looking at different perspective. I was thinking of another method, right? I was thinking that I was just thinking about the method that we would use to solve this question. That is why I quickly bring up the market price. I say, okay, this is equity. We need to get percentage gain, right? Right? Because I've not done it. I was like, okay, what would be the percentage increase? Okay, we need to do before acquisition and after the what acquisition combined. These are the two things you should be looking at. See, forget about the question, forget about the bulkiness of the question. I want to challenge you this night. Go and solve question November 2024. I think November 2024 question 1 or May 2024 question. I think May 2024 question 1. May 2024 question 1. I challenge you this night. You should go and solve it, right? Settle down, right? Analyze the question like this. Analyze it. You will get it. There's nothing there, right? There's nothing in merger and acquisition, either cash to shares exchange, share to share exchange, or they may tell you that they take over 80% of this. It's just normal language, just normal CR, majority and minority interest, right? So please go and check May 2024. Send that question, send it. Let's see what you have, right? So on this note, do we have anyone that have question, please? If you have question, mute your mind.
Hello, Mr. Ryan. Please drag down to copy the question. I want to copy the solution, sorry.
Away. Can see it in I'll upload it to, maybe tonight. Question.
Go to percentage gain of the equity for LT. Okay, thank you.
Question. You must ask question
My
before we
question
move.
is, can you hear me, sir? Good evening, sir.
I can't hear you.
Good evening, sir.
What is good about the evening?
Good evening.
Go ahead.
Okay, I just want to ask, is there any procedure that we need to follow for this share for share, or
That is that that is the steps I'm talking about. I started with, right? That is the steps I started with. That the first steps is for you to calculate the total numbers of shares of this is the steps you need to follow, right? This is the steps. Calculate the total numbers of shares of the combined company, which means that it could be that for every 4 shares of these, 3 will be issued. Do you get? So that is the aspect you need to look at as well, right? Right. So that is why we say, okay, 150 for every 2 shares. Okay, 150 to 1 shares in that. Okay, 150 divided by 2 times 1 will give us the 75. It means that LP we issued 75 million shares to LT, right? That is shares. That is share. That is why it is called share for shares, right? Share for share exchange, right? So the total numbers of shares as a result of the combined company is 450 million. Now the next question is, what is the total profit of the combined company? Class, do you get? You calculate the total profit of the combined company. The next step, calculate the total market value of the combined company. The fourth step, calculate the market price of the what combine of each of the combined company, which is when you add the total numbers of shares, right? Then 69 divided by 450, you have your market price per what? Per shares. Is that not so? Then the question now is, what is the percentage? How many? The total is 154, right? Of the combined, which EVLP take over. So how many portion? What is the portion? What is the portion of the acquiring company? Now, is that share to shares? That is where you will now use it to do what? Because if you are issuing shares, that share that you are issuing, what is the equivalent numbers of shares? All right? What is the equivalent in naira? Right? That is why we have 154 times 1 divided by 2. So LT we have the market price of 77 naira 49 kobo. Now, what is their old market price? What is the old market price? Which means that if you want to calculate the old market price, you can either, the question will have tell you that use free cash flow. Use free cash flow to the firm or free cash flow to equity to determine the value of equity per share. So you've already calculated the value of equity per shares. Then you can now compare it to post acquisition. Is there any loss or gain on or for the or is there any loss or gain? Or if they say okay, percentage gain or loss, percentage. You just okay. New is the post-acquisition minus old is the pre-acquisition, before acquisition, right? Divided by old before acquisition. You have the percentage, right? Now, in this case, both of the shareholders will be willing to do what? To sell. The other person will be willing to sell. In fact, LP where maybe we'll be going to what is it called LT companies probably on a daily basis sell to convince them that okay this thing is profitable. Okay, now let's merge or do what is it takeover? I think it's takeover thereabout, right? So and that is it. Do you understand, Rachel?
Yes, sir. Got it. Thank you, sir.
Any other question? Are we good? So don't forget Ican exam. To pass Ican exam is you just have to be strategic. Even in ACCA, you have to be what? Strategic, right? It is not all about covering all the syllabus, but what is most important is that anyone you cover, make sure you know it very well. At any time, at any day, they will ask you, okay, you can. But guess what? What we have done so far is enough for you to pass SFL. Is enough for you to pass SFL, right? If you want to capitalize on it, it is enough for you. You don't need to carry all the old textbooks because you want to write ICANN exam or you want to write ACCA. What we've done so far, if you focus on it, right, right, if you focus on it very well, you don't need anything in SFL, right? If you truly believe in what we're doing, right, you don't need anything again in SFL. Now, the last question, which is format. What factors should the LT shareholder consider before deciding whether to accept or reject the offer made by LP? What are the things? I know. What are the things?
If it's going to bring about the synergy,
Okay, the gain,
yeah,
the percentage gain. They need to look at it. Okay, the percentage gain makes sense before they look at whether there is a gain after the acquisition.
yeah.
What other things will they consider?
Well, you can consider the offer price, the price for the offer.
Okay, which is the market price, right?
Yes, or the bid
Okay.
price, or let's say the bid price, and they should also consider if they are going to. Well, the price will determine if they should consider the effect of dilution or not.
Class, in this case, there is no, there is a gain, there will be a dilution. There's no point. There is no, I'm sorry. There is a point. I don't want to say there's no point. There will be a dilution. There will be a dilution of shares. There's no, right? We know. But after the dilution, what will be the gain of the shareholders is that they need to look at the offer price. How much are they willing to offer? Is that not so? Is it reasonable enough? You need to look at what will be the gain, right? If I actually dispose this off now, what is our percentage gain? What is our gain? Are we making a gain? So the shareholders of the shareholder of LT may actually accept the offer because there is a percentage gain of about 29,000 or 29 point something percent. So what does that indicate? It indicates that their market price will skyrocketed, will increase by 29%. So as the shareholders will be looking, every shareholders want to get return on their investment at any time, right? So shareholders will say, okay, let's accept this offer and we do what? And we move on, right? Is there any other thing we need to consider quickly before we go? Quickly before we go.
Regulatory and legal compliance. I don't know if I'm right.
Yes, they need to check. Yes, they need to check. Are they complying with the SEC and there's a regulation compliance as well. These are the things they actually need to consider. And again, the management may decide that even with that, we don't want to sell. right? Even without, we don't want to sell. So please, it is 4 marks. You need to list, you need to talk about at least four. So when you talk about four, I think 4 marks, one marks, one mark, that is four. So, distinguished professional colleagues, I think I have, we've solved one, right? Oh, we've solved one question, right? Before we go, is there anyone that have question? If you have question, no, unmute your mic, unmute your mic. If you have question, unmute your mic before we go. I think I have to